What is going on, y'all? This is Pay Me in Dividends, and today is September 9th, 2025. I want to talk to you guys about Yield Max ETFs and my dilemma with Yield Max ETFs. If you're new to the channel, I talk about income generating investments through the stock market. If you have watched my videos before, you are familiar with Yield Max ETFs and how they operate. They seek to provide income with high dividend yields. And again, if you've watched my channel, you know that I've owned several different Yield Max ETFs over the past year, almost year and a half. All right, so I want to show you guys a visual of what exactly I mean when I say I have a dilemma with Yield Max ETFs, and some of the obvious reasons as to why I'm no longer using Yield Max ETFs as a tool to grow my portfolio and grow my wealth. And I'm also going to offer a couple other scenarios as to where they could possibly fit into your portfolio in a very strategic way. All right, so there are some pros and cons, but I think it's good to cover both sides of it because the yields can look extremely appealing, and they did to me. That is exactly why I've invested in them before. And it's not to say that I'll never invest into Yield Max ETFs again, but I think there's a time and place for them, and you have to be extremely strategic when you're dealing with these. So we're going to look at seekingalpha.com. I think this is a great website and a great tool to get a visual of what's going on in the market. So the first chart that I have up here is price return. All right, now the benchmark that we're using is the S&P 500. All right, and I went a year out, and I'm using 4 Yield Max ETFs compared to the S&P 500 over the past year. All 4 of these have been out for at least a year or longer. TSLY, Tesla, is the Tesla option income ETF from Yield Max. I believe this is the original ETF that they came out with back in 2022 or 2023. So this one has been out for quite some time. So we're going to look over the past year, right? And then we have msty, which of course is the MicroStrategy Yield Max ETF. We have NVDY, which is based off of Nvidia, and then we have Coney, which is based off of Coinbase stock. All right, so over the past year, now we're just looking at price performance. All right, we're going to look at another chart that shows a different gives you a different perspective on the performance of these, but we're just looking at price performance. You can see over the past year, all 4 of these are negative. All right, negative 38% for Tesla, negative 24% for msty, negative 25% for NVDY, and negative 42% for Coney, while the S&P 500 is up 18% in the past year. All right, so again, using the S&P 500 as a benchmark, if your assets are not performing up to the benchmark, you may have to reevaluate where you're putting your money into. Now, again, this is just share price appreciation. This does not account for dividends, and there's a reason why I'm showing you guys this. All right, so I want to show you the total return, which accounts for dividends, and you can see that all 4 of these ETFs have outperformed the S&P 500 over the past year, with dividends accounted for. So again, the first chart is without dividends accounted for. They all underperform the S&P 500 in 1 year. With dividends accounted for, they all outperform the S&P 500 in 1 year. But here's the thing, right? You got to ask yourself, at some point, if you're planning on using this dividend income, are you willing to sacrifice your principal dwindling down? So that leads to the next question: what phase in your wealth accumulation phase are you in? Are you at a point right now where you're building up your assets, right? You're trying to grow your brokerage account, Do you actually need this income right now? Is it wise for you to have these high yield ETFs in a taxable brokerage account where you're paying taxes on this on an annual basis, which is undercutting your growth? All right. So these are questions that you got to ask yourself when you see these high yields. Yes, they will outperform if you're reinvesting the dividend, but at some point, the goal is to use the dividend. All right. So if you just plan on continuing to reinvest the dividend indefinitely with no plan on using the income, and you're paying taxes on those dividend payments, you got to ask yourself, are you kind of shooting yourself in the foot, so to speak? All right. So this is kind of the mindset that I've developed now after using some of these ETFs. This is not just theory. You guys can see the progression of my channel where I've used these ETFs, and I'm always modifying and evolving my strategy in order to be a better investor, because I am a long-term investor. All right. So I think for me at the stage I'm in right now, it is a bit more beneficial from a tax perspective and from a growth perspective to put my money into the S&P 500, which has outperformed all of these ETFs just on a share price basis, and I can avoid paying taxes on those dividends in my taxable brokerage account, and I can actually see the share price and the value and the principal of my account grow. Now, where I think these ETFs do fit into a portfolio is once you've built a strong foundation. Let's say your goal is to accumulate $500,000 in stocks, right, between all your brokerage accounts, or maybe it's $1 million or more or less, whatever that number is for you. It's going to be unique for every person. Maybe once you get to that point, you can then dedicate a percentage, 10, 20, 30% of your total portfolio to some of these high yielding ETFs, and then you can withdraw some of that income and use it to pay for expenses. But just keep in mind that if you want the principal to stay relatively stable, you're going to have to reinvest a portion of these dividends. All right, so I hope that makes sense. I've seen other videos of people explaining this, but I'm trying to give it to you guys as simplistic as possible, just so that you can get a visual again of what you're going to get on a lot of the return on the actual share price, which again, we can see the numbers are here, right? The numbers don't lie. All four of these are down over the year. All right, whereas the S&P is up 18%. Again, when you account for dividends reinvested, yes, you will outperform the S&P 500, but this is assuming that you reinvested every single dividend that you received on a monthly basis from this ETF, meaning that you didn't withdraw any income, and you also got to account for the fact that you're going to have to pay taxes on this high yield income. All right, so I think there's a time and a place for Yield Max ETFs. I don't think they're all bad. I just think it depends on what angle you come from it and where you are on your investment journey. I would say if you only have 10 or 20, $30,000 or even less invested in the market, personally, I wouldn't go out there throwing all of your money into these high yield ETFs. Trust me, I've tried it before. Again, this is not theory. This is based off of personal experience. But I think in the beginning, you really want to build that strong foundation with either an S&P 500 ETF or a NASDAQ ETF like QQQ, something that has a long historical track record of going up over the long term, so that you have that strong base, that strong fundamental base. And then from there, you can create smaller pockets, 5, 10, 15, 20% pockets of high yield income. but you're not sacrificing that long-term compound interest from those fundamental investments. All right, so now I do want to show you two, before we get out of here, I want to show you two ETFs from Yield Max that I do actually like, and one of them is GPTY. And I actually held GPTY not too long ago. I got rid of it to put it into a S&P 500 momentum ETF that I've spoke about in previous videos. And what I like about this is you can see all time it is down about 10%, but the thing that caught my eye on this ETF is, if you guys remember back in April, during the entire tariff situation that was happening earlier this year, everything crashed, right? The entire market, the index, the S&P 500, the NASDAQ, they all dropped over 10% in 1 week. And we can see that drop here April 4th, right? What I like about this ETF is, look at this recovery up until now. It is up 26% since that drop back in April. All right, so that right there shows that some of these ETFs can be powerful, and the good thing about an ETF like this is that it is diversified. All right, they have 15 to 20 holdings in this ETF, GPTY, compared to the single stock ETFs that rely just on one single company. All right, another good one is CHPY or Chippy. This one is actually up all time. It did come out, the inception date was right at the dip of the market in April. So it really hasn't been battle tested yet. And it really was just a coincidence that the inception date was when the market was down. So it had nowhere to go but up. So I would like to see how this one performs in a market downturn. But I think Chippy is good as well because it is a semiconductor ETF. Again, it is diversified with several different companies, and they are selling options in order to generate that income, but it's not reliant on one single company. So I do like Chippy. I do like GPTY. These are two ETFs that I would consider reintroducing back into the portfolio. GPTY, at least. I've never owned Chippy, but I would consider buying these two ETFs in the future if I do want to add some high yield income to my portfolio. But again, it's all about being tactical. It's all about having a game plan and being very strategic when it comes to these high yield ETFs. And you got to be mindful not to get caught up in the high yield percentage, and really look at the numbers and see if these are assets that are appreciating in value, or are they just shooting out a bunch of income that forces you to reinvest consistently just to outperform the market, but you never actually get to touch any of that income. All right, so these are just a few things on my mind when it comes to Yield Max ETFs. Again, pros and cons. You just got to be strategic when it comes to investing in these high yield ETFs, and not just Yield Max, but even the other ones, right? The Round Hills, Rex shares, Defiance ETFs. So all of these ETF managers kind of have the same narrative, and you just got to be very strategic and tactical when it comes to investing into these. All right, so you guys let me know in the comments, what do you think about Yield Max ETFs? Which ones are your favorite? Do you kind of share the same sentiment as far as which angle you come from when it comes to putting your money into these ETFs? And you guys let me know in the comments, what do you think? And as always, I appreciate you stopping by the channel, and I will catch you in the next video.